We've been increasing our exposure generally to the digital asset space. I think Bitcoin has been the leader of the pack. The others are following. Ether has followed. Now Solana and Hyperliquid is a new one, the new kid on the block. We think this is three revolutions in one: a monetary revolution, a financial services revolution, and really, in a much broader sense, a digital property rights, immutable property rights online. Never happened before, only possible because of blockchain technology.
Cathie opens by addressing U.S. policy under President Trump, particularly the administration's negotiations with India. On the surface, these negotiations involve immigration and worker visas, but Cathie sees this as a classic Trump negotiating tactic. Headlines and tariffs like threats that dominate media coverage, but are ultimately part of a broader deal-making process.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
This is part of President Trump's negotiating process, and I think he's negotiating quite intensively right now with India. I think India would have the biggest impact here in terms of workers in the United States. So I think this is a little bit like tariffs, and it's going to capture all the headlines, and it's going to really take the oxygen out of the room, because there's a lot of really good fundamental activity happening in the United States relating to policy.
Well, a lot of that innovation, a lot of that Silicon Valley kind of goodness really comes from the talent and the labor pool. We've been talking about this for quite some time in terms of how do you train your engineers, you train Americans to do a lot of what Silicon Valley depends on foreign workers to do. Does this impact innovation in Silicon Valley, and does it impact mega cap stocks, tech companies that are dependent on this?
Well, from what we know of this administration, they ultimately want to keep students who have been educated in the U.S., foreign students that have been educated in the U.S., in the U.S. So really, I just think this is part of the negotiation with India, and that when all is said and done, we're probably going to loosen up the H-1 visa program.
But in the short term, is that going to have an impact on tech companies?
I think what it's going to do is force tech companies to do what they're already doing, and that is become more efficient. And the other thing to note is, coding is changing dramatically. The number of coding jobs and openings has dropped dramatically because of AI. All of us can become coders. You've heard of vibe coding.
You looked at me there, by the way.
That's a lot of faith in God.
This is natural language programming. Generative AI is prompting ChatGPT to get your programs going. We can all do that. That's simplifying it. But I do think it gives you a sense of the kind of productivity, that possibilities that are possible, that will impact these tech companies longer term.
It kind of takes me on to my next question. Is Chinese tech going to outperform US tech from a stock market point of view over the next year?
Well, the valuations are quite different. They're roughly half of what they are in the United States. We're very impressed at how quickly China is moving here. I think the DeepSeek moment gave us an opportunity to understand that China is very focused on the open source software movement. We forced them into that. The U.S. did, because our companies stopped selling into China out of fear of IP theft. So they've gone the open source route and are moving very quickly. I think competition is a good thing. It's a good thing for the United States. It's a good thing for China. I also think what's good about China recently is it is focused now on the idea that maybe commoditization has gone too far, especially in the electric vehicle space, so-called involution. They are thinking...
Whatever that means,
Whatever that means. So they're thinking that, and it is true, It is expensive to develop these large language models, even though they say it's not. There's a lot of pre-training that takes place before you get a DeepSeek. And if you're not profitable as a company, you're going to have a lot of trouble competing in that space. So I think even that is changing, which is interesting.
Cathie, you say competition's a good thing. We've talked about the landscape. Let's talk about you.
Yes.
There's a lot more tech, innovation, robotics, ETFs out there now. How do you plan to compete?
It's a great question, Lizzie. I think our differentiation is our research. We have what I believe is the first sharing economy company in the asset management space when it comes to research. We give our research away. We have given our Tesla model away, for example.
DeepSeek approach.
Yes, the open source from that point of view. I think we have a very loud voice out there when it comes to innovation. And I think some of the calls we've made starting in 2015 with Bitcoin and at the same time roughly Tesla, Palantir, Coinbase, NVIDIA in the earliest days. We were there when most people thought it was a PC gaming chip company. So I think we've got a loud voice. You're asking about conversion because we have these other companies out there which with huge distribution. Well, thanks to Bloomberg, we are able to share with you our research, and it's research that others aren't doing in quite the same way.
But when you look at the numbers, ARC's up about 40% this year. Flows are absolutely flat. What can you do about that if great performance just isn't drawing people in?
Well, what's interesting about that is most active managers are outflowing today. So the fact that we're flat is very interesting. And what's more interesting to us and very gratifying, having entered UK and Europe, is that we are about to cross $1 billion here in Europe and the UK, which in 2 years' time, we acquired Rise 2 years ago, is very significant, I think. I think here in Europe, a quarter of our reader base, even before we launched, was in Europe. And the question was, when are you coming to Europe? So we are getting the flows here in the UK and Europe, and we're really excited about the momentum behind those flows.
Crypto's down a little bit. Bitcoin's selling off this morning. At these kind of levels, are you a buyer or a seller?
Well, we've been increasing our exposure generally to the digital asset space. I think Bitcoin has been the leader of the pack. The others are following. Ether has followed. Now Solana. And Hyperliquid is a new one, the new kid on the block. We think this is three revolutions in one, a monetary revolution, a financial services revolution, and really, in a much broader sense, a digital property rights, immutable property rights online. Never happened before, only possible because of blockchain technology.
One of the most pressing questions is, when will AI become profitable? Cathie explains that the number of serious competitors in the large language model space has already narrowed. Many startups have been quietly absorbed through acqui-hires by giants like OpenAI and Meta. That leaves four dominant players: OpenAI, Anthropic, and Google's Gemini. Whether this turns into a four-horse race or a two-horse race remains to be seen. What is clear is that productivity gains from AI are already showing up.
When does AI become profitable? When can I assume a margin on AI? And I'm talking about the large language model companies here. Huge amount of investment going in at the moment, Cathie, and everybody's scratching their head wondering, does all of it deliver? Does all of it produce a rate of return? Are we going to have to see some sort of Schumpeterian sort of clearing of the market at some point? What does that look like? What is your sense of kind of where we are at the moment?
Well, I think that the number of companies truly competing in the large language model space has shrunk. These acqui-hires that OpenAI and Meta, that's all about other companies really not making it. So that
so the process has already started.
The process has started, but
who do you think is going to win?
Well, I think the big four right now are OpenAI, Anthropic, xAI, and Gemini. Those four. And we don't know if this is going to be a 4-horse race or a 2-horse race. Let's see over time how they leapfrog one another, and they are doing that regularly. It's very interesting. But you ask about profitability. Companies that are not hiring people, the number of new job openings is falling. They are already enjoying huge productivity increases. That's why margins have been sustained even with the tariff hit recently. In fact, tariffs being put in place, the counter to that is, okay, we have to cut costs. And has been, and they're willing to pay $20 a month. Some are willing to pay $200 a month. And those who are replacing PhDs, they're willing to pay $2,000 a month or more. And so as long as these companies get that signaling that companies are willing to pay, they will continue to invest in this race.
Cathie, I want to get your take on a deal that was preliminarily announced on Friday between the United States and China when it comes to TikTok. Now, I think you're a unique person to have this conversation with, given your early exposure to Chinese tech stocks.
Yes.
TikTok has now been, we're still waiting for all the details, but what we understand is being given 7 board seats to Americans. There's a question of a licensing agreement. There's a question of some of the holders, including the Murdochs or Larry Ellison, among others. What kind of precedent does that set for you as someone who is exposed to Chinese tech? Is this the new norm, or is this an idiosyncratic story?
I think this is idiosyncratic. I think during our election, President Trump promised that he would be open-minded to keeping TikTok U.S. It's so important to the young people and many more people in the United States. So I do think it's a one-off special case. I also think it's a part of a broader negotiation with China. I think if anyone can reenact a Nixon in China moment, it is President Trump. He has been toughest on China. Everyone trusts that he will strike a good deal. Everyone in the U.S. trusts he will strike a good deal with China. And I think we're probably going to get better than expected news longer term. You'll hear a lot of saber rattling in the meantime. But this is one indication of that.
Is TikTok a good investment if the U.S. has more hold over it? And counter to that, is ByteDance a good investment if this is a deal that's being created?
You know, the one question we always have when there is a breakup like that is, does a company lose some of the network effect in some way? Now, they were already supposed to be separate, China and the U.S. We'll see. We'll see. TikTok has been an amazing company, has taught us a lot. This is what I mean about Chinese competition. They taught our companies a lot. I will say that a company called Vine in the U.S. was the precursor, and Twitter at the time bought it, was not able to activate it in the way TikTok has, and TikTok ran away with that ball.
So would you want a piece of it?
You know, we have to do a deeper dive when we get into the data room.
That's our expert breakdown of Cathie Wood's latest views on innovation, crypto, AI, and global markets. Whether you agree with her or not, her ability to connect policy, technology, and investment themes makes her one of the most compelling voices in finance today. If you enjoyed this deep dive, don't forget to like the video, subscribe to the channel, and hit the bell icon so you never miss an update. And let me know in the comments, do you think Cathie is right about AI and crypto being multi-decade revolutions, or are investors getting ahead of themselves?